this is what I do to start my week out when looking at pairs. I like to start with a blank chart, and I like to start on the weekly time frame. I look at last week's candlestick, and I look what they do. We're going to do this on AUD USD this week. Just a random pair, no real particular reason why I'm choosing this pair. But we look at last week's candlestick, and the markets are open now. It's Sunday evening. It is, I don't know, about 6 o'clock my time, which is Central Time. And look at last week's candlestick. We have it's bearish, slightly bearish, with a pretty large wick to the downside. The week before that was a pin bar to the downside as well. However, the week before that was a bearish engulfing candle. We do have a downtrend that's on the weekly time frame. So I would not be surprised if we see some sort of bullish momentum that retests this previous market structure, and we are finding resistance right here, or excuse me, we are finding support right here, which is previous market structure again. But this is just kind of a funny area for AU. If we look at this, all of these wicks right here, all right, that's where AU just was and just broke down below. Is all of those wicks, which, I mean, really, if you want to consolidate even more, it looks like AU broke through that consolidation area, came back and retested it, and is now going bearish again. But it is finding support because of the wicks. That's telling us that there's support there, which we can see with market structure to this side. Overall, long term, AU is trending downward. This is, in all honesty, just an area of consolidation. If we put this consolidation box right here, this is just an area of consolidation, and it's been going on for months, since 2016, I guess. Right around the middle of the year in 2016, early to mid 2016, is where we've been consolidating at. We haven't gotten a lot of movement out of AU in quite some time. In fact, this movement that we've been seeing now for the past, I don't know, probably 3 or 4 or 5 months, is the most movement, or most consistent movement, that we've seen with AU in quite some time. But what else do I look for on the weekly time frame? I can draw some trend lines, some weekly trend lines on AU. We'll go ahead and do that now. And really, I'm doing candlestick analysis, looking at the previous week's candlestick, but I'm also getting a feel for where price is. So we can zoom way out, and we can see AU is trending upward on a really, really far out from 2001 upward. We're trending up, or 2001 onward, I should say, we're trending up. But more recently, since 2013, we've been trending downward. Like I said, the past couple of years have been consolidating. So I've got my 2 trend lines marked. I really don't like to draw support and resistance levels on here much. We can add one. The reason why I don't like to draw support and resistance levels on here is because there's really no point. Specifically, you'll see when I go down to lower time frames, this support and resistance level right here is really far away from where price is on the 4-hour time frame, and so it's relevant, but it's not relevant to the 4-hour time frame. I'll draw it, and I look at it, but unless it's pretty close to where price is, I don't like to draw support and resistance levels from the weekly time frame. We'll go ahead and drop down to the daily now. Daily, same thing. I look at last week's candlesticks. I like to see what we had for candlesticks last week, and then I will also draw some trend lines and maybe some zones, possibly some zones, but that's not a definite. I like to usually stick to drawing zones on the 4-hour time frame, but sometimes I'll slip a zone in on the daily. It just kind of depends. I will draw, however, horizontal lines based off of the daily time frame, something like this, where we can see these rejections right here. We can see this beautiful head and shoulders that completed. So yeah, we'll draw some support and resistance levels. There's not really anything else. We could draw a level right here, and that's fine. Basing that level off of this touch, these rejections over here, this touch right here, this touch, this touch. So you can see we have some rejections across the board. We'll go ahead and leave that. And then we can add one more down here at the bottom. and that's all I'm going to draw for the daily is those three. And then you can see up here, which on the 4-hour time frame, like I was saying, you won't even be able to see this support and resistance level up here. Now looking at last week's candlesticks, this bearish candlestick is today's candlestick. It's Monday's candlestick, even though it's still Sunday night. Last week we had Monday, Tuesday, Wednesday bearish, Thursday and Friday bullish, with Friday's bullish engulfing candle. Now, some people might ask me if that's significant or not, and the reason why I'm going to say that it's not yet is because we have a lot of bearish movement downward. Yes, this is a bullish engulfing candle. Yes, this is the second bullish engulfing candle in a row, but you don't have to go far back to see when we had a bullish candlestick, then another bullish engulfing candlestick, followed by 3 bearish candlesticks in a row. And so I'm not convinced that this is going to go bullish yet. Yes, it is reacting off of a support and resistance level, but I'm still a little hesitant. And so what we're going to do now is we're going to drop down to the 4-hour time frame, and I will do a little bit more digging. All right. So looking at the 4-hour time frame, we can look at a few different things. Let's see here. So we have this trend line that we can draw. Simple trend line, nothing too wild and exciting about it, nothing fancy, but it's relevant, right? And so that's kind of my approach to this. Is I'm not flashy, I'm not what you would refer to as wild and exciting, but I like stuff that's relevant. And so we're going to keep this, add that trend line, and just for simplicity's sake, let's I want to show you. I mean, that's as simple as it gets, is just drawing a simple trend line, and you have a break of this support and resistance level that was drawn on the 4-hour time frame, and all bears throughout. I mean, you could have traded this in a few different ways, but just that simple bearish engulfing candle through that trend line. There was no retest, and I get a lot of questions about breaks and retests. The reason why I like to preach breaks and retests instead of just a break is because a lot of times when price is approaching a significant support and resistance level or a significant trend line, you will see price break it, and then you'll see, in this case where it's bearish, you'll see buyers come back into the market wanting it to go in the opposite direction to respect that trend line or that support and resistance levels, or a support and resistance level, excuse me. But it doesn't always happen that way, and so I would say probably 80% of the time you will see some sort of retest. You'll see some sort of pullback, specifically when you get a break of a trend line or a break of a support and resistance level, but not always. And so this is the other 20% of the time where you don't get a retest and you just get a continuation out of it. Now, the next question is, well, how do you trade that if you don't get a retest? Then what's your confirmation? A lot of times the way that I like to look at this is if I get a candlestick that breaks a trend line or a candlestick that breaks a horizontal line, and then the next candlestick is also in the same direction, that's a good indication that it's going to continue in that direction. When you get 2 candlesticks in your direction or in the direction of the break, then you should be confident about entering. In this case, we had a break of this trend line, and then we had a break of this horizontal line, and then we also had a bearish candlestick after that. If you would have entered in after that bearish candlestick, you would have had a little bit of drawback or a little bit of drawdown in that trade, but not significant, right? Your stop loss should have been somewhere around this horizontal line right here. And making that into a 2-to-1 trade, you would hit take profit. For example, I'll show you. So stop loss slightly above the horizontal line. Go simple 2-to-1 trade. Right there. And like I said, a little bit of drawdown and very simple 2-to-1 trade. Don't really have to think of it any more than that. But there's a simple trade based off of what I was just talking about. When you get a break of a trend line or a break of a horizontal line and you don't get a retest, but instead you get a continuation candlestick in your direction, that's when you have the opportunity to enter. So I just wanted to point that out. That's not relevant to our analysis right now. We can add another horizontal line, or we can add a zone. Let's go ahead and do a zone. So we have this zone right here, which we can see price is currently, price I guess opened up on that area and now is going bearish off of it. Now the next question I'm going to get is, well, how do you incorporate Fibonacci and harmonics and all of the secondary analysis stuff using indicators, which sometimes I have indicators on my charts and sometimes I don't. I guess the two indicators that stay on my charts probably all the time are these two EMAs, the 8 and the 21. It's just personal preference with any indicator, honestly. Indicators for me are very secondary analysis. I do not place any sort of emphasis on what indicators are telling me. I simply use them as secondary analysis only, as a confirmation on top of the price action confirmation that I already have. And so what does that mean exactly? So something like you'll see, or you might have heard, or if you haven't heard, a lot of times people use EMAs or any moving average as moving support and resistance level. If price is below it, then the moving averages act as resistance, and if price is above the EMAs, then the EMAs act as support. And you can trade exactly the same way that you trade based off of trend lines and horizontal lines. You can trade EMAs the same way. I don't necessarily do it that way, but I do like to have EMAs on my charts. It shows me kind of where price is. You will sometimes see me add a few more EMAs, like the 50 and the 200, and sometimes I even have the 800 on there. And that just shows you where price is in relativity to where the moving averages are. And I am a fan of that. Very, very rarely will you ever see me with any other indicators on my charts, simply because I just don't use them. I don't put a lot of emphasis into any indicator, and the reason for that is because indicators are always based on past information, not what's currently happening. And price action is based off of what you can currently see happening. And so I place a lot more emphasis on price action than I do on any sort of indicator. That's just me personally. But for those of you wondering why I don't ever have indicators on my charts, that's the reason why. So now back to AU. This is kind of where we might use some sort of Fibonacci. We're in a downtrend, right? We are trending downward. We can throw a Fibonacci retracement on this. We can see that price opened up right on this, or just above the 70.7, and is now going bearish. We'll have to wait and see how this candlestick closes. Me personally, I'm not a big fan of trading Sunday nights, and I don't ever do it. Honestly, I never enter a trade on a Sunday night. The only time I ever have a trade open on Sunday nights is it was from the previous week. And aside from that, I don't do anything else on Sunday nights. I like to actually stay away from charts on Sunday nights. I don't like to give myself that temptation to open trades. I like to wait it out and see how the market reacts for the first 3 or 4 candlesticks before making any judgmental moves. So I definitely wait until Monday to trade, and usually Monday afternoon / evening. But sometimes I'll look at New York and maybe I'll get in a trade. Trying to think of what else I really do. This is, like I said, this is the time that I look for harmonics, Fibonacci retracements, Fibonacci expansion time, that sort of thing. This is when I do that stuff. But I mean, that stuff is really secondary too. Like you don't need any of that. You don't need Fibonacci. You don't need You don't need harmonics to be successful. You don't need any of those things. And so my best recommendation is just learn about supply and demand zones, learn about trend lines and understanding channels, and really I can place all the emphasis in the world on understanding the way that trend works. Trading with the trend is definitely a good idea. So like with AU right now, AU trending downward. I didn't speak about market structure, but market structure is extremely important, understanding market structure. And market structure to me is very secondary now. It's not something that I even think to talk about because I just do it. I just notice it. I just understand it without even thinking about it. So looking at market structure with this, we can draw it out, right, and understand that market structure works like this. Alright, so there's our market structure. Ultimate high, this is technically a high or low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Right? That's a very simplified version of what market structure is. So the market is trending downward. Ways that you can get in based off of market structure alone. There's your 61.8 reversal. Right off of the 61.8, so there's an easy entry off of that. We can do this probably all the way down. So the next one, reversal off of the 70.7, very simple. The next one, what am I doing? Double top on the 61.8. The next one. So this is probably the most complicated one, but we had this double top with the right side higher than the left side on the 61.8. Then you got the bearish movement, and you did have technically the micro structure in this is technically trending upward. I know a lot of people thought that this was going to go bullish during this period of time there in this channel right here. But overall trend is still trending downward. So that's why I refer to it as micro trend, is because it's trend within the overall trend, which you can look at micro trend in a whole bunch of different ways. You know, you can look at the weekly being the overall trend, the daily being a micro trend of the weekly, the 4 hour being a micro trend of the daily, the 1 hour micro trend being the 1 hour trend being the micro trend of the 4 hour, so on and so forth until you get down to the 1 minute. And so there's a lot of different ways to look at it. But when you're looking at this overall, it's trending downward. And so I can't place enough emphasis in understanding that you should be trading with the trend. Even the worst entries when you're trading with the trend can still go your direction, right? As long as you're using proper risk management. So yeah, that's the way that I do in my analysis every single week. Everything that I talk about, everything that I show you guys is based off of just starting this way. And like I said, I add Fibonacci retracement and expansions and harmonics and stuff like that because I like to, but it's definitely not required. And so it's not something that I necessarily recommend. There are no harmonic patterns on the 4 hour time frame that I can see. Correct me if I'm wrong, feel free. But I don't see any harmonic patterns on the 4 hour time frame, so I'm not going to drop any of them. But yeah, so if you have any questions, comments, anything, reach out to me. If you want to know more about any of the stuff that you've talked about, feel free to visit theprofitsocietyfxc.com. The link is in the description down below. It will explain everything. It's a trading academy that goes into grave detail about how to do all of this stuff accurately, exactly how to do all the stuff that I just outlined, as well as goes into advanced stuff like harmonics and Fibonacci and things of that nature. So if you have any interest in that, shoot me a message on Telegram at TraderJud is my Telegram handle, or shoot me a message on here. Leave a comment in the comment section down below. I'm always available. Don't be afraid to reach out to me. I hope you guys have enjoyed this video. It is a little bit longer. Again, tomorrow's video will be the 10 daily pairs, which you can see over here: EU, UJ, Gold, EA, GN, AU, GU, EJ, and UCAD. Let me know if you want me to bring back the cryptocurrency stuff. I was doing a cryptocurrency video every week for, I don't know, 3 or 4 weeks, and just not a lot of traction gained with that. So if you guys are interested in any of the cryptocurrency stuff, drop a comment in the comment section down below. Let me know, right? Reach out to me, because I don't have a problem doing that stuff, but nobody was watching it. And if nobody's going to watch it, then I'm not going to do it. So yeah, that's it. Thanks, guys. Hope you have a great evening and a great rest of your weekend, and I will see you guys tomorrow.